Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Like I said, we're going to go with our normal analysis today. I'm waiting for other traders to come back in before we make our special announcement today. So, with that being said, let's get to it. Let's get this analysis rolling. So, liquidity, like I said, is starting to, it won't. It should be good, for the next few days. After Thursday. Definitely Wednesday. Thursday is going to start to be a little thin, and then things are going to get pretty quiet. Going into the end of the week as we approach the holidays, and everybody's trying to get to wherever they need to get to. Home, back with families and whatnot. And even if you don't celebrate the Christmas holiday, because of your faith and whatever you celebrate, it's widely known that the Christmas holidays, um, um, it is widely viewed as the time of the year, especially in the markets where things just start to get really thin, and most people are off regardless of what faith you follow. We just know that liquidity is going to be poor. Most people just take the time off no matter what. So, uh, you know, with that being said, like I said, I'm trading in pretty small sizing right now. I've pared everything back to about a third of what I normally do. So if you normally trade 10 lots, trading 3 or 4 lots makes more sense right now, because you'll see spurts of moves in the market that tend to give just sometimes you'll see a random move happen in the market, like the euro might rally 30 pips, and you go, where the hell did that come from? And it was just probably some buy order that got pushed through the market, and the lack of liquidity just allowed for a quick spike up. This is also the time of the market that you don't want to really be chasing price. You shouldn't be chasing price anyway, but especially when liquidity gets poor. And just by the way, the next week between Christmas and New Year's, that is a really, I know we talked about this last week, but I'm going to say it again. If you see a trend develop next week, do not try to stand in the way of it. Some years, the euro dollar, I'll just use the euro as an example. Some years, the euro dollar just might move up and down 30 pips a day. And it does that like every day between Christmas and New Year's. Just there's no liquidity. Next week, though, might be a little different, just based on the tone that we ended the year on, with these two central banks moving in opposite direction. You just may not have there's just not a lot of reason to be selling dollars. So no one, if people are just buying going into year end, there's no one on the other side willing to sell, then what you'll find is just a kind of an insatiable grind in pairs. I have seen that, and I have seen that from time to time, and we might actually get it this year. So if you see some sort of move like that develop, that I'm just giving you some fair warning. All right, now obviously when you're looking at the euro dollar, the multi-year breakdown was at 104.60. All right, and even as early as in European trade, we traded up towards late in Asia, early in Europe, we traded up towards resistance and then reverse. This is in my opinion, this is a sell zone, which we've talked quite extensively about. If you go over to the daily charts, you can see the low from over here at 104.62, I think is the low, or 104.63. 104.62. I just had it right there, wherever it was at. 104.62 and 0.2 of a pip, and I mean we exceeded it by 7 or 8 pips, and then rolled right back over. Even if we get a rally above 105 to 105.20, 105.30, this is all a sell zone, all the way up here. So, I'm going to write that down, that 104.70 to 105.20, that's key resistance. We have a very bearish bias in place right now, very bearish bias, and support. Well, obviously, we'll just have to write the lows down here from the other day, but you'll notice it is 127% extension. We did exceed it of this last range. We did exceed the 127% extension, but all the wick bodies held above it. So any move now down to 103.65, you should find some buyers. I mean, but look, that's the place, in my opinion, below 104. If we get down there, 103.65, I'll write down. If we get a move below 104, I think that's the place where you want to cover shorts. Again, is there any reason to be pressing the gas to be long the dollar, short the euro? I don't know, maybe. I'd rather to be on the safe side. I'd rather just keep shorting rallies as we get them up to 104.60, 104.70, and then cover it down here at 104 or 103, 104.10 or 20, and just keep doing that until we finally break down. And then once we break down, then you continue on that course where you just kind of sell rallies, from new supports. But trading in the direction of the trend makes most sense. All right, we have written down here like an AB equals CD move, and if we do get it, that takes us down to basically 101. So just some food for thought moving into the new year. Okay. Let's go over to the cable. So the cable buckled today. I mean, we really came under some pressure today. There was no UK data that I saw, but you can see the key reversal. We had drawn this out Friday, right here. Okay, and that was a big rejection. I mean, and so it's 125.10. And I don't know if that's going to be correct, but I don't know if I actually want to be short the cable right at this very moment in time. That maybe. So as long as we remain below 125.10, it's a bearish trend. Okay. Remember, we turned bearish when we broke back below this trend line, this broken trend line right here. If you guys don't recall from last week, as soon as we broke below that trend line, it turned right back to bearish. All right, now support, 88% retracement, 618, and horizontal support all come in. 123.50. I think we should write that down. Even if we take out these new lows, what you'll see is you'll see people get really excited about being short the cable. You're like, they're like, oh, it's breaking out. But what they don't see and what they're probably not looking at is what we're seeing here. You got an 88% retracement and also a 618 of the bigger move. They both, there's a cluster that comes in right at 123.50. So I think that's going to be pretty good support today. So if you're short and you're looking to cover it up down there, that's probably the place you want to look for, right? Let's take a look at the Swissy. Okay, so here's the Swissy, and last week, well, let's stop here for a second. Let's talk about the daily chart. So one of the things that and I bought the Swissy, I want to say on Friday. I think I bought it at 102.70, sold it at 103.05, and I played it to the long side, but I was hoping that we'd get a dip down to 102, and we haven't seen that dip all the way down to 102 yet. Let me just get rid of that. But I think you have to look at that as being support right now. So any dip down to 102 is going to be very well supported, and that's probably the place, 102, 102.10. That's probably the place you want to be on the long side. of the Swissy. Now, if you think about it, guys, this is the in my opinion, the the best dollar long from an interest rate differential standpoint. I mean, you've got of the majors, you've got the Fed raising rates, you got the Swiss National Bank with 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 rates in negative territory by 75 basis points negative. I mean, that divergence of monetary policy should drive the the Swissy higher, and it should continue to drive it higher. Obviously the risks are that there's some European risk, but you can't just trade on fear that, oh my God, Portugal is gonna default on its debt, or France is gonna elect Marina Le Pen. You can't trade on that like right now. All right, the differentials are wide and they're widening. All right, and so ultimately the dollar Swiss should go higher. Just the Swiss franc is still the de facto European currency of choice. If you want to own a European currency, you do it just because of this, for safety reasons. If you take like an institution, they're like, listen, I don't care if I have to pay the Swiss National Bank, 3/4% of interest, as long as I know my money is safe. So, that's why the Swissy always has a harder time going higher, because things in Europe aren't perfect, if you will. But we do have like a bullish flag. You can see it's set up like a flag pattern, which is a bull flag pattern. It looks like that. So if you can get an opportunity to buy at 102, it's probably the place to do it. Now, resistance I'll write down is 103.40. High here's 43. I'll say 103.45. Sorry, guys. Yawn. Got in late. I watched the movie. It was kind of a later showing. Rogue One, for those of you that missed it, I saw it last night. Good movie. As a Star Wars fan, it's a good movie. All right, dollar yen. I was short the New Zealand yen, Canadian yen, Aussie yen going into the weekend. Covered those up last night. And the dollar yen is, giving back some of these gains. Now, I forget who it was last week that told me, hey, had said, hey, Blake, look at that trend line that the dollar yen's forming here. I'm like, oh yeah, you're right. We have a trend line that really rejected price. We had this, tweezer top, 4-hour tweezer top that developed. Finally starting to see a little bit of downside pressure. And with the BOJ, tonight, well, there's a chance that we'd see a little bit of pullback here. I think any pullback now down to 116, you have to view that as a buying opportunity for now. So if we get a dip today down to 116, that might provide an area for you to be on the long side. I don't look at even touching the dollar yen until we get down there, or like thinking about it. All right. So 116 support. Resistance. Hard to say where resistance is at today. It looks like 118 is going to be pretty good resistance. Yeah, so some of the people that are like late, to the ball game right now, they may want out on a rally back to 118. Rejected us right here. Probably any rally back to 118 is probably going to find some sellers. So it's still bullish. It's just, I don't think I'd be a buyer just yet. Okay. Excuse me, really quick. Let's go over to the dollar index. Oh wait, no, I'm sorry. Go over the Canadian first. Okay, here's the CAD. So, excuse me. The CAD, if you missed it, we rejected the 618 late last week, right? We rallied sharply off the 200-day moving average and multi-year trend line. Okay, multi-year trend line. There's your daily chart. 200-day moving average. Bam, and then we bounced right to the 618. Okay, so that signals why, you know, let's move this now. That signals why we stopped there. All right, now I know we overshot it a little bit to 134.20 basically, but now we have to look at any dip in price from that spike high. The 38% retracement comes in at 132.90, and this little, you know, like area right through here is going to offer good support on dips. So if you think about, and this is we talked about this on Friday, if we get a dip below 133, you have to realize that this 132.90 is right below price, right? It's right below that price, so right below that round number. So if you think about like stops triggering below 133 and being able to get long down here, you know, knowing that there's the 38% retracement, I think buying it at 132.90 is the way to go. You know, it's like the place that you want to look to be long. Resistance is obviously 134.20. I still think that we'll struggle on rallies to 134, but you know, I'll write down 134 and then 134.20 as resistance, and we're bullish as long as we're above that 131 level. The 200-day moving average is bullish. Period. End of story. All right. All right. I'm going to leave it at that. When we come back, we're going to do the Kiwi, Aussie, dollar index, peso, Nordic currencies, and then you know, I'm going to have a special announcement for you guys. You know, after we finish up the analysis of all the majors. So don't go anywhere. I'll be back in a few moments. Thank you. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. Sorry about the wait. Yeah, and I probably used the wrong descriptive word for the announcement. Announcement is more of an important announcement, not necessarily special. It's just it's an important announcement that I'll be making here in just a few minutes. So, but I want to finish up the morning analysis. So let's get into it. Let's finish this up. Let's go over to the Kiwi. So I did cover my Kiwi dollar at 69.39 just a couple pips ago. Now we have a head and shoulder pattern that's that is trying to play out right now. Now, one thing that you might notice about the head and shoulder pattern, and which made me a little nervous over the weekend, is we didn't close below 69.50, which was the neckline, right? But we did close below the 200-day moving average. We did close below the channel support, which gave me the confidence to be short the Kiwi overnight. I just, you know, I think you got to be just a little careful. We could get a rally, you know, especially if the dollar yen continues to pull back. The dollar yen could prompt some dollar selling, you know, which will allow for a Kiwi rally. But any type of rally should be capped around 70 cents. I don't see us going, you know, too much higher than that in the near term. So even if we do take out like these overnight highs, you know, move to 70 cents or maybe 70.10 would be a good place for a short, in my opinion. So if we get a rally like this, you know, then I think you want to use that as an opportunity to be on the short side if we can get it. I'm going to write down 70 cents. All right. Now support, the lows here is 69.30, but below that, um, below that, this is going to be really interesting trying to figure out where we're going to go to next. So take the high to low, or low to high, excuse me. 127% extension takes us to 68.95. So 69 cents is the next level support. Should we continue to break down? It is bearish. Okay, the Kiwi is bearish. Let's go over to the Aussie. Here's the Aussie dollar. The previous support, current resistance, even, I mean, you look at like this hourly move, we gapped down, rallied right to previous support to 73.10 and reverse. Well, this is also this isn't a trend line, by the way. That was, we were looking more at a measured move of the pennant. But as you can see here, 73.10 is mega resistance in the Aussie. And the Aussie, we do have a flag pattern that points us to 70.50. It doesn't mean we're going to go down there in a straight shot by any stretch of the means, but it does look, bearish. Now we have 127% extension. It comes in at 72.50. I think we should respect that for now. Now, I know you're probably looking at that saying, well, Blake, we're only 10 pips away from that. Should I just go long? You can try to go long if you want. You can try to fight the dollar if you wish. That's your prerogative. For me, I'd rather just be a seller of rallies, or buy buy the dollar on dips. But to get long here, it's, little dicey. I mean, if you look, especially if you think about the longer term developments that are happening here, false breakout above the highs of the triangle, then a reversal. Well, that doesn't look pretty, not at all. Okay. Now we'll go over to the dollar index. Oops. All right, so here's the dollar index, and dang, really? Oh, look at the dollar. Look how strong it looks. I mean, this flag's trying to play out. And I'm not long the dollar. I just closed my Kiwi, that was the only dollar long I had. But if we break here, we're at a 50% retracement. 618 comes in at 103, 16. We have all these spike highs up here at 103.25. So since that's a 618, I think this 103.20 is going to offer some resistance today for the dollar, because I don't think it's going to be a runaway dollar today, but you never know. I mean, maybe it is. Maybe we just, run past that 103.20 and we tag 103.60, which is a 161% extension, which is possible. Okay. Dollar index is bullish. Support on dips, 102.50. See, on Friday we wrote this down. On Friday we had that red line here. Said, okay, on a dip down, 102.60, it's going to be a good long. Well, if you would have taken advantage of that yesterday, you're doing pretty well. That was our analysis from Friday. Um, let's go over to the peso. I was short the peso on Friday. I got out to somewhere around here. I ended up just squaring up my position. Um, you notice how the peso is underperforming the rest of the dollar pairs, which is important because at some point dollar weakness is going to come in, and when it does, I think the peso is set up for a good short. I want to be short the dollar peso personally. Um, I'm not short the dollar peso. I'd hope we'd rally above 21. Frankly, I just don't know if that's going to happen. Let's get rid of this trend line. We don't need that. $20.30 to $20.70, and I think you just gotta leave it alone for now, unless you get to the outskirts of those ranges. But it is bullish. It is bullish. There's just it's a range for right now, but it's overall still a very bullish trend here in the dollar peso. Okay. One of the things about these commodity currencies coming under pressure, like the Kiwi and the Aussie and everything, and this is the reason why I covered it up on Friday. I told all of our traders in our chat room, I'm like, hey, the commodity currencies are getting worked right now. I don't think I want to be long the peso at this time. All right, here's the Norwegian krona. The Norwegian krona really close to resistance here. Above 871 is going to be a breakout. Right here, or 872. I'm going to write that down as key resistance. It is bullish. With crude oil as weak as it is right now, with crude oil as weak as it is, it looks like we're going to, the dips are being bought pretty aggressively. You can see them right through here. Let's get rid of that. Let's get rid of that. So dips are being bought pretty aggressively at this point, and that comes to 862. So while we're above 862, it's bullish. Okay. All right, let's get over to the Swedish krona. Last but not least. All right, and this is pretty well behaved. We can see it's the U.S. dollar Swedish krona just is nonstop. It's in massive breakout territory, and which way you slice it. So dips to 931 are being very well supported, and resistance is going to be just the spike high. But we just got to respect the fact that it's being bullish, and the last known high was basically 945. Okay, and We got a very bullish move in the U.S. dollar Swedish krona. So there's your bias chart. Hey, at least the good news is you look at the bias chart; it's very directional, right?